SPY, VOO, and VUG are three popular ETFs, but they serve different purposes. Choosing between them depends on whether you want to track the overall S&P 500, get a lower-cost index fund, or focus on high-growth stocks. SPY, or the SPDR S&P 500 ETF, was the first ETF ever created and tracks the S&P 500 index, which includes the 500 largest U.S. companies. SPY is highly liquid, making it popular among traders, but it has a higher expense ratio than VOO. It's great for short-term investors who prioritize liquidity and trading volume. VOO, or the Vanguard S&P 500 ETF, also tracks the S&P 500 index, but has a lower expense ratio than SPY. Since both funds follow the same index, their performance is nearly identical. However, long-term investors tend to prefer VOO because of its lower fees, making it more cost-effective over time. VUG, or the Vanguard Growth ETF, is different from SPY and VOO because it focuses only on large-cap growth stocks rather than the entire S&P 500. It tracks the CRSP US Large Cap Growth Index, meaning it holds stocks like Apple, Microsoft, and Tesla, but excludes value stocks. VUG is ideal for investors who want exposure to high-growth companies that have strong potential for future gains. Now, let's compare them side by side. First, diversification. SPY and VOO both track the entire S&P 500, offering exposure to a broad mix of industries. VUG, however, focuses only on growth stocks, meaning it's more concentrated in technology and consumer discretionary companies. If you want broad market exposure, SPY or VOO are better. If you want to bet on growth stocks, VUG is the way to go. Next, expense ratios. SPY has an expense ratio of 0.09%, while VOO has a much lower fee of 0.03%. This makes VOO a better choice for long-term investors who want to minimize costs. VUG also has an expense ratio of 0.04%, which is slightly higher than VOO but still low. If you're looking for the lowest fees, VOO wins. What about performance? Since SPY and VOO track the same index, they perform almost identically, but VOO's lower fees give it a slight edge over time. VUG, on the other hand, has historically outperformed both SPY and VOO during bull markets when growth stocks are leading. However, during market downturns, growth stocks tend to decline more than the overall market, making VUG more volatile. If you prefer stability, SPY or VOO are better choices. If you're willing to take on more risk for potentially higher returns, VUG is the better option. Now let's talk about risk. SPY and VOO provide exposure to the full S&P 500, which includes both growth and value stocks, making them less risky than VUG. VUG is more concentrated in high-growth companies, which can lead to bigger price swings. If you prefer a balanced, lower-risk approach, SPY or VOO are better. If you're willing to take on more volatility for the chance of higher growth, VUG could be the right pick. So which one is the better choice? If you want broad S&P 500 exposure with lower fees, VOO is the best long-term option. If you prioritize liquidity and trading volume, SPY is a good alternative. If you want to focus only on high-growth stocks with higher potential returns but more risk, VUG is the better choice. The best ETF depends on your investment strategy and risk tolerance.